That's the first tick on the index. As expected, 15 points in the green for the Nifty.
Things are just up close to about 0.1% on the benchmark indices. The benchmark indices have dipped into the red.
Down and out from about 11 this morning. There was some hope maybe before that in the first one and a half odd hours, but not after that. It's been basically just a slide. 17,838 is the 20-day, and we'll end around 17,847.
Hello and welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Indian markets closed near the day's low after failing to hold on to its opening gains. Sensex loses over 300 points. Nifty loses 100 points. Mid-caps buck the trend with the index ending with minor gains. IT stocks support while financials drag. Samvardhana Motherson strikes a deal to buy SAS Auto System Technic for 540 million euros in enterprise value. Analysts give the EPS accretive move a thumbs up. The stock closes 3% higher on the news. The US FDA issues a Form 483 with 8 observations for Cipla's Pithampur unit. Worries about the nature of the undisclosed observations pushes the stock 6% lower. CNBC-TV18 Newsbreak is confirmed the union government opposes Hindustan Zinc's plan to acquire Vedanta's global zinc assets and says it will vote against the proposal at the EGM. Hindustan Zinc's management says it will engage with minority shareholders and remains hopeful of the government's offer for sale going through before the end of this financial year. Crude remains in a tight leash as supply worries wane and the market awaits the effect of demand recovery from China. However, fear of rising interest rates continue to weigh. Here's the line of what we have in store for you. It's a packed show today. In Market Opinion, we have Arvind Sanger of Geosphere Capital Management and Sanjeev Prasad of Kotak Institutional Equities. And in Corporate Voices, we have Kunal Malani, who is the CFO of Samvardhana Motherson International. All right, we'll discuss all of that in greater detail, but let's take stock of how the market fared in trade today. The Wall Street failed to hold opening gains to end Monday near the day's low. Sensex lost over 300 points to close 0.5% lower, while the Nifty fell over 100 points. Financials were the major drag, with the Nifty Bank falling over 1%. However, mid-caps outperformed to end mildly in the green. BSE companies raised a market cap of close to 1 lakh crore rupees today. Prashant Nair is here with the day's trading action. Prashant.
Well, we started a new week and the markets were under pressure right off the bat. The first couple of hours, things looked like there was hope, but then there was a constant, steady slide. Nothing alarming, but a clean 100 points knocked off the Nifty. That's about 0.5%. Banks have been consistently underperforming, so the banks lost more. The bank index itself was down about 1%, double of what the Nifty gave back. I mean, we basically picked up from where things had left off, things we had off on Friday. There were no new real big developments over the weekend, so there was more of the same. Losses of the large caps coming through names like Adani Enterprises, Britannia, Cipla, which came under pressure. It was just a a day when there were more losers as compared to gainers. It was not as if there was anything special or very large about what went down, except maybe in Adani Enterprises. In the broader markets, breadth was in favor of decline, so more down than up. So some losses first. Shilpa Medicare was a big gainer on Friday, gave back some today. Data Patterns, Rainbow, that's a hospital company, Tata Investment Corporation were some of the losses that we saw. But I have to say, although numerically losers outnumbered gainers, what went up with a lot more enthusiasm and a lot more volumes. And I think that's something to pay attention to in the coming days. Bharat Dynamics, the defense companies, Zomato, smaller tech companies like Sonata Software, Happiest Minds, health insurer, Star Health, Serra, All Cargo, Gokuldas were some of the names which did very well. We don't have cues from the US. US markets are shut, stock and bond markets. And the market here in India, the Nifty is closed exactly at the 20-day moving average, which is the short-term determinant of whether the trend is going to flip bearish from a little bit of an upside that we've seen over the last 2 or 3 weeks or so. Back to you.
All right, Prashant, thank you so much for joining us with the day's trading action. Let's get you some market opinion now. Arvind Sanger, who's the managing partner at Geosphere Capital, said that the Adani route, reopening of China and the persistence of inflation are some key factors that could have impacted Indian market. He also discussed his top sectoral bets for D Street. Listen in.
The Adani story has caused some money to leave the market. The second is China reopening. I think that's been a big factor. India was a big beneficiary last year till late in the fourth quarter of China, shooting itself in the foot with its own zero COVID strategy. And as that is unwound, China has gained, and other markets, India was one of the biggest winners in emerging markets, have lost. Nothing wrong that India is doing, but it's a little bit of giving back for some of the benefits last year. And the third now is obviously the persistence of inflation. And so I think, yes, it requires a little bit of patience, but I don't think the Indian growth story, medium or long term, is broken. I think the stocks have gotten a little ahead of themselves in terms of valuation. Last year, energy was the leader. Metals and mining was the laggard because China is much more important to the metals and mining sector than to energy. This year, I think that metals and mining will continue to see more response as we go later through the year. But keep an eye on China's revenge travel. I think that's coming in a big way. Forward data on travel and everything else is showing that. There is data that China had pre-bought and put on tankers a lot of oil from Russia that they didn't need last year while the lockdowns were taking place. So some of that is being drawn down. We like companies in the power and related. We think that power demand in India is going to be extremely strong.
Let's get you some more opinion now. Gautam Duggar, who's the head of research institutional equities at Motilal Oswal Financial Services, said that the growth seen in Nifty earnings is very narrow. On the auto sector, he said that the auto space has been a positive revelation, while consumption has been a bit of concern. Take a look.
Strength in the earnings that we had seen throughout 2021, 2022, some part of that has started dissipating beginning of FY23. And it is not reflected in the Nifty numbers because Nifty sometimes tend to hide a lot of things. So even in this quarter, if you see Nifty's performance, you have seen a 12% earnings growth in Nifty. Expectation was 14%, so nothing wrong. It's only in the broader market, the pain is far higher. Auto has gone through 5 years of a down cycle, both in volumes and profitability. And this is the first quarter after last many quarters that auto has actually seen a material earnings upgrade. And the breadth of the earnings upgrade in auto sector is also quite high. And of course, financials continues to remain very resilient. Auto has been a positive revelation. Consumption has been a bit of a concern because there is a broad-based consumption slowdown, which is reflected in the numbers, whether you look at staples, discretionary, durables, and of course, two-wheelers.
All right, that's some market opinion coming in. Moving on now, Samvardhana Motherson has struck a deal to buy SAS Auto System Technique for 540 million euros in enterprise value. The EPS accretive move received a thumbs up from analysts. Sonia Shanoy is here with the fine print on the deal. Sonia.
Well, thanks a lot for that. As you rightly pointed out, Samvardhana Motherson made a large acquisition today. They bought 100% stake in a German-based company called SAS Auto System Techniques. Now, this is a company that provides cockpit modules for the auto industry globally. They have a large presence in the electric vehicle space, and the entire funding of this acquisition will be done through a mixture of internal accruals as well as debt. The company told CNBC-TV18 that they will maximum go up to a debt-equity ratio of 2 times. So they won't be stretching their debt too much. SAS has a large exposure to the premium electric vehicle segment. 60% of their revenues comes from Europe. 90% of their revenues comes from the consoles, cockpit and the door panel segment. This acquisition is EPS accretive as well. Elara Capital put out a note where they said that the acquisition is positive. It will help increase the content per vehicle for the company. It will also help them increase their presence across geographies and help increase the EV OEM presence as well. They will add 12.5% addition to the existing FY24 EBITDA to SAMIL, and it's not too expensive compared to the recent acquisitions that Samvardhana Motherson has done.
Net debt to EBITDA ratio is what we follow, which is 1.8x basis December results that we announced. Even if we consider the whole 540 million as debt, just theoretically, we would be slightly above 2x, and considering an improving trajectory going forward, at the point of closing, I still expect that the whole thing will still mean a debt EBITDA of less than 2x. When this asset comes in on a blended basis, the margin profile should look better than what the SAMIL one is right now. This asset carries 50% of its revenues being EVs. So in effect, we would be looking at closer to 8-9% at an aggregate level now. Having said so, our own portfolio, if you look at from an order book perspective, nearly 37% of our order book is also EVs. So going forward, the share of EVs seems to be increasing quite substantially at an aggregate level for us as well.
Okay, all right. With that, let's move on to the third headline today. The US FDA has issued a Form 483 with 8 observations for Cipla's Pithampur unit. The unit contributes to over a sixth of the pharma major's sales. The stock closed with cuts of 6% on the news. Ekta Batra is here with the analysis. Ekta.
Well, the nature of the observations is what the street is worried about, and the fact that there are 8 in numbers. So that the assumption is that, it's probably going to be difficult for them to solve 8 observations. And one of their key drugs is filed from this particular facility, which is basically the inhalation drug Advair generic. So that, the estimates are that they could probably hit the market by Q1 of FY24 when it comes to Advair generic. Now, with the company having received 8 observations for the Indore facility, with the quantum being high and the assumption that the nature of the observations will be difficult for them to solve it quickly, assumes that Advair generic will now become an FY25 product. And there is a past precedent that they are going by. The Goa facility, which is also an important facility for the company, did receive a warning letter, and a Brixon generic, which is a cancer drug, is filed from that particular plant. If in case we did see a Brixon generic also getting delayed, and that is expected to be an FY25 product. Now that is the worry which the street is basically currently contending with when it comes to Cipla. Now, I just want to put it into perspective in terms of news and the Indore facility as well. They manufacture respiratory products as well as oral products. This particular plant, the Indore plant, it is one of their key plants, and it contributes to around 25% of their FY23 EBITDA. So it is an important plant for other products as well. Now, Incred has written on this. They maintain a hold, but they've cut the target price. They believe both the products, Advair generic and a Brixon generic, are likely to see a worse competitive landscape in FY25 versus FY24. Macquarie, JP Morgan both have an outperform overweight rating on Cipla respectively. JP Morgan has said they currently forecast Advair generic launch in Q1 of FY24, 5 to 6% contribution to EPS in FY24 and 25. Well, the proof of the pudding is really going to be in terms of what the Form 483 holds, because in the past we've seen many observations solved in just a couple of months, and few observations resulting in adverse reactions.
Ekta, thank you so much for making sense of the stock move today, lower by 6%. That's Cipla. Time for a break now, but as we do that, we leave you with some more expert opinion we got today. Listen into what Sanjeev Prasad of Kotak Institutional Equities had to say on the market outlook.
I'm not that surprised that you are seeing, some amount of earnings cut. I suppose these are more in the discretionary space. Having said that, these are reasonably well flagged. If you look at our own numbers, we haven't really changed anything in the last 6 months now. There have been some minor downgrades for some of the discretionary names, but otherwise, earning numbers have been pretty much broadly the same in our case, at least for 23 and 24 for the last few months now.
Welcome back. You're still with us on Markets Today. Let's go to the rest of the headlines that we are tracking for you. To the fourth headline now. We told you first, and now it's official. The union government has opposed Hindustan Zinc's plan to acquire Vedanta's Global Zinc assets. It has also added that it will vote against the proposal at the EGM. Earlier today, we spoke with Arun Misra, who is the CEO and whole-time director Hindustan Zinc, and he said they will engage with all minority shareholders, and it is looking to grow globally via acquisitions. Listen in.
We have a 3 months time period after the board meeting to conduct or convene shareholders meeting, and we also need to have approval from majority of the minority shareholders for the deal to go through. So those are the rest is all process. So we are going through the process right now. Government and Ministry of Mines is the important stakeholder in our business. They have 29.5% of shares. So I'm always in touch with them for all matters of strategic importance to the company. It will be an OFS. It cannot be anything other than OFS. And I'm very, very hopeful that before March, we should have this in the best interest of everyone.
Okay, that's the word coming in from Hind Zinc. Important clarification there. Moving on to the fifth headline now. Crude prices remained in a tight leash as supply worries wane and the market awaits the effect of demand recovery from China. However, fear of rising interest rates continue to weigh. Manisha Gupta is here with the latest from the oil space. Hey, Manisha.
Well, yes, the crude oil prices have been making lower lows, and after 5% of a decline in the previous week, we are just about trading flat as we start a new week here. Hotter than expected data in the U.S. markets have yet again fanned concerns about higher rate hikes from U.S. And then many of the supply concerns seem to be easing. For example, the U.S. inventories at 842 million barrels is now at October 2022 highs. U.S. also is looking to sell or give more by 26 million barrels via the Strategic Petroleum Reserve. If you look at Kazakhstan, they also are supplying nearly 100,000 tons of oil via Russia's Druzhba pipeline. Markets also are looking at Asia taking a lot of Russian crude oil. Actually, when you look at India, our own imports of Russian oil for the month of January have been at record highs. So there is no dearth of oil really coming into the markets. The only positive that you see is from the OPEC and IEA saying that strong demand is what they're anticipating in the second half of this year as China continues to reopen. And that is where you will see tightening of markets there. The experts tell us that from these current levels, there could be yet another couple of dollars of a decline that you can anticipate, but it is a $4 of a jump up from these levels that they are anticipating. So 2% down to 4% up is the kind of range that the crude prices could be looking at as we move ahead from here.
Manisha, thank you so much for joining us with all those details. Let's stick with the energy space now. Oil majors have seen record high profits in 2022, but that is not the only record when it comes to the energy space. Fossil fuel subsidies, they have hit $1.1 trillion in 2022 due to the global energy crisis. That's an all-time high, and it combines subsidy for oil, natural gas, electricity and coal. This is as per the International Energy Agency. If we chart out the numbers over years, this is a substantial jump. In 2010, it was around $0.6 trillion. Then it moved to levels of $0.75 trillion. Then it started coming down. In 2016 to levels of $0.37 trillion. Then it went higher to $0.58 trillion. But 2020 saw a sharp downtick, understandably due to COVID and sharp decline in energy prices. It picked up in 2021, and that is after when we saw in 2022 to $1.1 trillion. If we go forward and talk about this number, it's an all-time high. But if we split it further, subsidies for natural gas and electricity consumption more than doubled in 2021, and all subsidies rose 85% on a YOY basis. Most of the subsidies were given from emerging markets and developing economies as well. And more than half of these subsidies were from fossil fuel exporting countries. That's not very surprising. Though Europe spent $350 billion on energy subsidies, this was coupled with issues around supply from Russia. We spoke about higher electricity prices and gas prices as well, which now have cooled down. Everyone wanted to focus on renewables, but energy crisis did not allow that. According to Bloomberg, fossil fuel subsidy was more than double of the total investment that was made in the renewable energy sources. And important to note, this happened right after 2021 COP, where all the nations agreed to accelerate efforts to phase out fossil fuel subsidies. So clearly, decarbonization in a volatile environment will require more efforts. So that's the update, an important update coming in from the fossil fuel space. But with that, it's a wrap in this edition of Markets Today. Stay tuned for more updates on CNBC-TV18.